Hey there, I'm Apple Crider from Investing Simple. In today's video, we're providing an in-depth look at the question of how do dividends work on M1 Finance. Now, many investors on the M1 Finance platform are long-term investors, and a significant percentage of those are dividend investors. Now, the popularity of dividend investing on the platform is no doubt in part thanks to the attractiveness of compound interest. And for those of you that aren't familiar, compound interest is essentially the idea of interest accruing on top of your interest. So say you start with $100 earning 10%. The first year you're going to get 10% on that $100. Next year you've got $110. 10% of that is going to get you $11 in interest, etc. So this compounding effect kind of grows over time. And when you reinvest your dividends, that is what allows you to capitalize on that compound interest effect. So let's talk about how dividends work specifically within the M1 Finance platform. So the short of it is that on the M1 Finance platform, your dividends are accruing in your investing account. And then once those dividends that have been paid to you reach a combined $10 or more, they're going to be reinvested across your portfolio. So this has a number of effects on your portfolio as a whole. Let's go over the three biggest effects that this is going to have on you. So first of which is that compound interest, like I mentioned earlier. So because your dividends are being reinvested, then you have more shares of stock. You're going to be getting more dividends paid to you the next time around. So that allows that compounding effect to really take place in your portfolio. The second of which is that this automatically rebalances your portfolio. So if you're not familiar with the idea of rebalancing, essentially what this is say you want to have 10% of your portfolio allocated to 10 different stocks, okay? Well, 1 year later, odds are it's not going to be an even 10% across all those stocks because some may have gone up in value, some may have gone down, and so your percentages are off. So what's going to happen on M1 Finance is that your dividends are going to be reinvested into the companies that you were underweight in. So say now you have 11% in one stock and 9% in another stock, those dividends are going to go to the 9% stock. And essentially what this forces you to do is to buy low and sell high. Follow that time-tested adage of people like Warren Buffett, so you're buying low when the stocks go down when they're on discount, and then you're selling them when they are higher. So M1 Finance automatically rebalances for you, and one of the ways it does that is by reinvesting your dividends in those stocks that you are underweight in. And now the third effect this is going to have on your portfolio is that it keeps your cash invested, okay? So with a lot of these other apps that don't offer any kind of dividend reinvestment, your cash is just kind of sitting on the side until you decide to do something with it. But with M1 Finance, they're automatically reinvesting that for you, so you don't have that idle cash sitting on the side, kind of dragging your returns back because that cash is just sitting there not doing anything. So with M1 Finance, again, like I said, once you hit that $10 threshold, it's pumped right back into your portfolio, no cash sitting on the sidelines, and no additional cash drag on your returns. Now, let's talk about something that's very important, but a lot of people don't like to talk about, and it's taxes, okay? Because there are tax consequences associated with dividends, specifically on M1 Finance, that you should be aware of. I mean, tax time is right around the corner, so you want to be aware of how these are going to be treated on your taxes and how to correctly report these. So the main thing you got to be aware of here is that all of your dividends from M1 Finance are going to be reported on a Form 1099 DIV or 1099 DIV. And this form is going to list, like I said, all of the dividends that you have received from M1 Finance over the past 12 months. So throughout the whole year of 2020, in the beginning of 2021, you're going to get that statement that says, okay, M1 Finance, we paid you this many in dividends. Whether they're reinvested or not, M1 Finance is still going to report those, and you are going to have to pay taxes on them. Now, how this works is that your dividends are going to be taxed as ordinary income at your traditional tax bracket rates unless they are qualified dividends. Now, I don't want to get too in the weeds here on taxes, but essentially a qualified dividend, in order for a dividend to be qualified, you need to hold that stock for at least 60 days. And those 60 days need to be within the 121-day window of essentially the ex-dividend date, which you don't need to know that much about. But essentially, if you held the stock for a 60-day period, starting from 60 days before this dividend was paid to 60 days after the dividend was paid, including the day the dividend was paid, so you have 121 days there. If 60 or more of those days you held the stock, then it's going to be classified as a qualified dividend, in which case it's going to be taxed as a capital gain. And currently, capital gains have lower tax rates than your ordinary income does. So that is how your dividends are going to be treated on a tax basis. Now, if you're holding shares of REITs or real estate investment trusts, those dividends are always taxed as ordinary income. So regardless of whether you hold them for that 60-day period or not, they are going to be treated as ordinary income. But for other stocks and ETFs that do pay dividends, If you hold them for that 60-day period, then they're going to be treated as qualified and as such will be taxed as capital gains. Now, another common question about dividends on M1 Finance is that in your account, you might see two different numbers. One is going to say your earned dividends, one is going to say your paid dividends. And these numbers might be different. And you might be wondering, why have I earned a different amount of dividends than I have been paid? Well, there is a relatively straightforward answer for that question. And in order to fully understand that, I have to define some terms here really quick. So the first of which is the ex-dividend date. And what the ex-dividend date basically means is that if you are holding the stock by the ex-dividend date, then you are going to receive the dividend on that stock when it is paid. If you buy the stock after the ex-dividend date, you're not going to receive the stock. So the day after the ex-dividend date is called the date of record. And if you buy the stock on the date of record, you're not going to be entitled to the dividend. The person who sold you that stock and who held it before the date of record on the ex-dividend date is going to receive the dividend for that stock. So you really don't have to know too much about this, but just know that on the ex-dividend date, the stock is trading without the dividend. So the person who owned it before the ex-dividend date gets the dividend, and you, if you bought it on the ex-dividend date or after, you're not going to receive the dividend on that stock. And so then, like I said, the next day is the date of record. So that's when the dividend is actually recorded, but there's a time delay between when the dividend is recorded and when it's actually paid to the shareholders. So they basically look, they say, okay, here's all of our shareholders on the date of record. And then on the payable date, that is when you're actually paid the dividend check. It gets deposited into your M1 Finance account. So hopefully that all makes sense. Just know it goes ex-dividend date, date of record, and then a while later, about a month later, is the actual payable date. So in that 1 month gap period between your date of record and your payable date, that is when your dividends earned and your dividends paid might show a different number, because you might have earned more dividends than you've actually gotten paid because you haven't reached that payable date yet. All right, so hopefully I didn't get too in the weeds there. If I did, definitely in the comments below, just comment any questions you have. I'd be happy to clarify. But another question that people tend to have with M1 Finance is whether they offer a DRIP. And a DRIP stands for a dividend reinvestment plan. And the short answer is yes, they do offer a dividend reinvestment plan, but it's a bit different from the dividend reinvestment plans that other apps or brokerages tend to offer. And first, let's quick define what a DRIP or dividend reinvestment plan actually is. And so this is essentially when you receive dividends from your stock, you're able to reinvest them back into fractional shares of that particular stock. And this is a feature that's really attractive to longer term investors because, like I said, it allows you to capitalize on that compound interest. Now, M1 Finance's DRIP is a bit different because it's a portfolio level DRIP instead of a stock level DRIP. So with most investment accounts that offer a DRIP, what they do is, say Apple stock pays you a dividend. It's a $5 dividend. With most other apps, they're going to allow you to reinvest that $5 back into Apple stock. But like I said, with M1 Finance, you're reinvesting that dividend back into your entire portfolio and buying those stocks that you're underweight in, as opposed to the stocks that paid the dividend, because Apple stock could pay a dividend, but maybe you're super underweight in Amazon, and so that $5 goes into Amazon instead of going into Apple on M1 Finance. So with M1 Finance, basically the gist of that is that it's automatically rebalancing your portfolio because it's a portfolio level DRIP, as opposed to a stock level DRIP that's offered by a traditional brokerage. So it totally depends on what your investing philosophies are, which one kind of makes more sense for you. But if you want your portfolio to be automatically rebalanced, that's only going to be offered when you have a portfolio level DRIP like you have on M1 Finance, not when you just have a stock level DRIP like on some of the other apps and brokerages that do offer those. So overall, the answer to how do dividends work on M1 Finance is that they accumulate in your account until they hit $10 or more, at which point they're reinvested across your entire portfolio, effectively rebalancing you, taking advantage of compound interest, and bringing you back to your target allocations. This is a very attractive feature for long-term investors looking to take advantage of compound interest because many other investing apps like Webull that are more tailored towards shorter-term traders don't offer a dividend reinvestment plan at all. And so if you're looking for compound interest, look no further than the dividend plan with M1 Finance. Now, if you want to learn more about how dividends work on M1 Finance, we have a full comprehensive article over on our website, investingsimple.com. The best way to find that is to head on over to Google and search for how do dividends work on M1 Finance and click on the link for Investing Simple. We'll see you over there.